I will take some report before we go into our conversation for today. Of course, the first on that report, we'll take a report about the Nigerian National Petroleum Company Limited considering the sales of Port Harcourt, Warri, and Kaduna refineries. This potential sales is part of a review process initiated due to the complexities and challenges associated with rehabilitating these aging facilities, which have struggled with inefficiency and mismanagement. Let's take that report. The decisions on whether to sell the refineries was echoed recently by the GCO of the Nigerian National Petroleum Company Limited, NNPCL. The GCO's comment came few days after Africa's richest man and president of Dangote Group, Aliko Dangote, said the refineries may never work again. The move, however, is not going down well with some experts in the oil and gas sector. They speak on the potential impact on job security and the local economy.
These refineries can work for 100 years. They have just worked, like Kaduna, just about 40-something years with good management. When they earmark money for the repair, all they need to do is to have sincerity, trustworthiness, and honesty.
We didn't think that one day, one Nigerian as an individual can run an enterprise that will build the size of refinery that we have that is even upgraded to 700,000 barrels per day. So if that has happened, the NNPC refineries can also work. And they can only work with very clearly defined roadmap on how to make the refineries work. Our refineries are young.
Key stakeholders in the oil and gas industry are calling for a balanced approach involving collaboration, strong regulatory oversight, and a commitment to fair competition in the domestic market.
We don't need to wake up in the morning and say, oh, price has gone up or price has gone down. And of course, it's a very big discouragement to us. It is depleting our capital that we invest money to buy maybe 45,000 liters of PMS and or diesel, and then we have put in almost 50 million naira. And then by the time you finish selling the product, your profit margin is as little as 500,000.
Somebody said he will bring the products direct to your filling station without putting cost of the transportation. Then automatically we're happy.
Some analysts have suggested that selling the refineries could be a viable option, particularly given a substantial investment made with limited success.
This 3 billion that they spent, they could build 30 refineries, modular refineries with this 3 billion. Because each modular refinery that will give you 20,000 barrels a day requires $75 million. If you need catalytic converter to produce refined PMS, $100 million. They could have built 30.
The final decision will depend on the outcome of the ongoing review, which is expected to be completed before the end of the year. Very impressive. There are issues around refinery, lots going on in that space. Then moving on, we'll take the reports from Adamawa State, where Adamawa State Business Enabling Reform, SABA, in partnership with the World Bank and other sub-national government, is stepping up effort to boost exports and empower local enterprises. Endowed with vast agricultural and mineral resources, Adamawa holds significant untapped potential in international trade. Let's take the report from Gibson Sudango.
Stakeholders across the export value chain converge at the banquet hall of the government house in Yola to deliberate on export certification processes. The session was convened in response to key challenges such as low awareness of export documentation, limited capacity among prospective exporters, and absence of a structured export development framework in the state. In his opening remarks, the focal person for the State Action on Business Enabling Reforms, Bello Abubakar Song, said the SABA Disbursement Link Indicator 6.3 is designed to improve the export readiness of businesses by supporting exporter certification and implementing a state-level export strategy.
We call this forum to sensitize the relevant stakeholders on, first, how to seamlessly obtain this certification, and also, to encourage those that have already obtained the certificate to utilize in the process of exportation so as to bring more revenue to the state through the export earnings.
The Director of Solid Minerals Directorate at the Nigerian Export Promotion Council, Samson Ido, described the initiative as a timely step forward, resolving bottlenecks in the non-oil export sector, particularly challenges around product quality and the capacity of local enterprises.
But part of what we are doing differently is to how to formalize informal cross-border trade, and which we have not been reporting presently. But as of now, we've been working with the National Bureau of Statistics and other agencies in that area to ensure that we're able to report the informal activity being carried along by informal exporter.
Adama State Commissioner for Commerce and Industry, Yusuf Akogu, acknowledged the difficulties exporters face and lauded SABA for creating a viable roadmap to address them.
The essence is to create awareness among the business people on understanding the procedures and the processes of obtaining certificate of export.
Messages of support were also delivered by representatives from the Central Bank of Nigeria and the organized private sector.
And residents of Bauchi State in northeastern Nigeria has appealed to the state governors in the region to introduce subsidized town service buses to reduce the hardship, as compressed natural gas CNG buses of the federal government are not seen despite the introduction of the buses to ease burden of Nigerians since removal of fuel subsidy. They made the appeal while talking to Trust TV in Bauchi. Let's Ademo Imam report.
The introduction of CNG buses continue to generate reactions in some part of the country, particularly in the northeast region, where most people are in dire need of improved socio-economic well-being. Some Bauchi residents share their perspectives on how the present government are neglecting the region.
Never seen that kind of motor that has that gas. But actually, the thing, if it's work, it's a welcome development for every citizen, because it will reduce the cost of transportation.
There's no plant station in the state, first. Secondly, the cost of transportation now in this country is higher because the petrol is getting higher and then the gas is lower, but the station is a problem.
Administration of Bola Ahmed Tinubu has conceived and is very good, considering the fact that transportation is key to economic boost in any nation. But we, the northern part of this country, to some extent, we are not seeing these CMG boxes in active, if you compare to the southern part of the country, particularly Lagos. So there is need for our governors to be proactive, particularly the northeast governors.
They said there are no signs of CNG buses on ground in the northeast. Effort to get state transport officials in the state to respond were unsuccessful.
Indeed, the people requesting through their governors to at least subsidize the cost of transportation in the state. The issue of the CNG buses that the federal government is a big project of the federal government that is ongoing, and of course we hope that it will get to the northeast very soon. Only recently a very strong CNG plant was launched in Yola, Adamawa State, which is also a northeastern state that should also be able to cover some of the region. There we urge the authorities to look into the demand or request by the citizens of Bauchi State there. Moving away from that now, today on the show we're looking at a very two important topic. The first is the 2025 budget crude oil benchmark, which was set at $75 per barrel. And of course, if you look at the output as well for the half year as well, it's not so encouraging. Look at it, we're still below the target so far. And of course, the Dangote also urging the federal government to replicate Naira for crude model in other sectors of the economy to boost growth and development. That is the topic we'll be discussing today. My guest, Mr. Adegboyega Adebajo, will join me on the show after this break. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Now we go into our discussion for today. Of course, the issues around 2025 budget and, of course, the crude oil benchmark and the half-year output. The indication are not really looking so good. If you look at the target for the budget, talking about the oil revenue, the benchmark was set at 2.06 million barrels per day. And that's talking about the output, the price per barrel and $5 per barrel, and of course an exchange rate of $1,500 there, 500 naira to the dollar. We are still way, well, with regard to the currency, we're within the range, but in terms of the barrel, the price of crude per barrel, we're still lagging behind, and of course the output as well is really not looking encouraging. How was the impact of this on the implementation of the 2025 budget? I'm being joined now virtually from Lagos by Mr. Adegboyega Adebajo. He's an economist and investment banker. Good morning, Mr. Adebajo.
Good morning, Yusuf. It's glad to be here again with you.
Thank you so much. Let's start this way. The 2025 budget implementation is at risk given the current oil prices, which you know is our major sources of revenue earnings. What do you think the implication will be with regards to, the implementation of the 2025 budget?
Well, Yusuf, first of all, let me speak to what you said of it being at risk. And I understand that statement very well, but happily, I think the government has noted what's going on. Absolutely, you're right. The production levels have not reached the budgeted or forecasted levels. And neither has the global market price sustained itself at a level at which the budget's income or inflow will come. And so this has created a problem. But why I say it's not a risk, and that perhaps is not so much the details of our discussion this morning, is probably because the government has gone borrowing to fund what would likely be an obvious deficit in the budget. I'm sure someone is crunching the numbers somewhere, but let's look at it here. For instance, the impact comes in two particular things. One, in terms of the volume of production not being able to meet the shortfall, and then the second one is in terms of pricing. So on two levels, you have challenges to meeting the budget inflow. Like you said, the exchange rate management hovers around the area, plus or minus, so that's not so bad in itself. So what we have is, can we ramp up the volume of production to be able to meet what the government expects this year in the 6 months ahead? That's quite a tall order, and those details we'll probably discuss later. And the second thing is in terms of global geopolitics. What's happening to oil price volatility? That is certainly not within Nigeria's control. And I'm not going to say we should hope for the best, because hope is not a strategy. We've got to be definite in terms of what we want to do and how we want to tackle the situation. So that's a starting point where we are, Yusuf.
Indeed. Let's look at the breakdown of the NUPRC report there with regards to the 2025, what we've had so far in terms of crude oil production and, of course, condensate there. Of course, the report indicated that 1.737 million barrels per day, 1.671 million barrels per day, 1.603 million barrels per day, and 1.683 million barrels per day, as well as 1.657 million barrels per day and 1.697 million barrels per day were produced in the month of January, February, March, April, May, and June, respectively. Given these numbers, there seems to be some consistency. And of course, if you look at the latest number that we have there in the month of June, is at 1.69 million barrels per day. We're still far behind the target of 2.06 million per day, even though the target is actually by 2026.
Yeah. So you're absolutely right there. And you know, you use the word consistency, and that tells me one thing as an analyst. We're probably doing the best we can. There's no doubt about it that since the administration came in, they've done as much as they can to ramp up production, and to ensure that there's a flow, because the dependency of the economy on crude oil is not in doubt. And if we're consistently hovering around the 1.6 million barrels, plus or minus, it means we're doing as best as we can. One thing I'm aware of, there have been infrastructure maintenance issues down in the oil sector, in terms of infrastructure for evacuating crude, the pipelines, which you know. There's also the security issue. There are still security issues down in the Delta. They're not as profound, or rather, the news of the insecurity in the north seems to overshadow this. But yes, there are insecurity issues over there. And of course, there's still the matter of crude oil theft, which some of us battle to really understand as to how crude oil can be stolen. But these things are there, and the shortfall is about 300 million. What that also tells you is that we're not even producing up to the OPEC quota. Now, something else has happened, and this is a bit of a worry, because we can only do so much about production, especially if we're producing as much as we can. I'd like to look a bit more as to oil price volatility and the geopolitics concerned. The Middle East is pretty unsettled. And I don't want to imagine that any Nigerian will be praying for war in the Middle East or hoping there's war in the Middle East. Because whether we like it or not, the negative aspects of that would also come around to affect us. But the key thing there is that the United States has actually become a net exporter of crude. And in a lot of economies, they are sort of winding down in terms of crude demand because they're looking at alternative energies. Europe has a plan to ensure that the greater percentage of cars on the road are electric by a certain time and no more fossil fuels. So everybody is sort of winding down, and this has affected demand. And as we both know, once demand starts to drop, price starts to drop. So the key challenge here is that at a point in time, even if we start to ramp up production, what's going to happen in the market where we already have a kind of a glut? Will that enable us to sell at that price? No, it is not likely. And that is what we're faced with right now.
Indeed, you alluded to the fact that the geopolitical tension, especially in the Middle East, is, causing a lot of volatility in the global oil market there. There's also, you talk about glut as well. From next month, you understand that the OPEC and its allies will pump in additional 580,000 barrels per day into the market, which you know will have a lot of impact on the prices, because when there's glut, the prices tend to be go down in most cases, and this will affect revenues of countries that largely depend on crude oil. What do you think government should do? You have also talked about we borrowing now, to fund the deficit in this regard. Is that the right way to go? What happened to economic diversification?
Yeah, you're right. Economic diversification is logical, and it's where we should go. But first of all, let me take it from the statements credited to Alhaji Aliko Dangote and the idea of replicating the Naira for crude model in other aspects of the economy. I, for one, I've been a strong advocate of not pricing so many things in dollars. Taxes and all. We can't be within the Nigerian economy and you expect people to pay taxes or whatever they pay in dollars, in US dollars. The central bank has done a fantastic job in terms of building up the foreign reserves to where we are. But you know that it's not a static figure. The reserves go up and down. And so what we need to do in terms of managing it is trying to keep it at its level or increasing it. So a Naira for crude model being replicated amongst any other place where we have commodities, it could be in solid minerals, for what it's worth, starts to reduce pressure on the Naira. And the reason I'm saying this is clear. If there's not so much you can do in terms of when you push up your volumes, you can't determine the international price, you might as well try to attract people by saying, okay, so I'm going to sell in Naira. That allows demand for Naira. It allows for improvements in terms of your exchange rates as a country. And there are at least some pluses in that area where it concerns monetary policy. I wouldn't start talking of economic diversification to a large extent, because that will take time, Yusuf. We are in July now, and so there's 1 month out of the last 6 months of the year that's already gone. To what extent, if we hadn't started earlier on in the year, can we fully diversify and start to see the impacts of that? Replicating the Naira for crude is a matter of policy, and that's quicker to execute. But that's not to say we shouldn't start on the diversification path. And there is a need to keep an eye on what else in Nigeria we can start to do to ensure that to a large extent we rely less on dollars. So that's very important.
Indeed, very, very important. Talking about diversification, one thing I have come to notice about our government or successive government is the fact that when crude oil prices go lower, we pay so much energy to, okay, let's diversify the economy. But once the price rebound, we jettison that idea and, of course, continue to rely on the windfall from crude oil prices. Is that the right way to run an economy? Shouldn't we, reinvest the profit from crude oil revenue into other sectors of the economy?
You know, Yusuf, it's the difference between having 1,000 Naira in your pockets and having $1,000 in your pockets. If you are in a place where you think in terms of the value you can get from the cash in your pockets. But you're absolutely right. To do such, we need to be sure that we have a kind of a plan and we're intentional about it. And this is where both our monetary and fiscal policies come into play. But we must also be mindful here because, like you pointed out, when the prices are low, what happens with energy prices? We must not allow inflation to creep back in because low costs and Naira for crude tends to bring in a lot more Naira, and all of a sudden people feel that, oh, there is a lot more money. If we are unable to keep the Naira stable, it would ultimately impact other areas of the economy. I believe that when there are higher oil prices and earnings are boosted, and this tends to happen, like what you said, the FX reserves go up. What that does is that it pushes up costs. And when costs go up, you know, it leads to inflation. So we must be mindful when we even say we want higher oil prices. On both the monetary and fiscal policy sides, it's very necessary to keep an eye on the key indices. And that's why I have spoken to the FX reserves and also in terms of what to do with inflation. It's one thing to earn all that money in dollars, but as the budget is being implemented, it's important that those areas that are critical and bring about priority. And as you and I have discussed on previous episodes, we need to see that the steps taken in the budget have a direct impact to the man on the street. So that begins to be what is key. I know for certain that the government is intent on ensuring that a lot of its infrastructure projects are completed within the next 2 years. And I understand that that's what most of the loans we are taking on is for. Infrastructure is investment, and if those loans actually go in there, then that's well and good. It will create jobs in terms of the construction part, and it's the kind of cost that is absorbed well in the economy and wouldn't necessarily bring about an inflationary aspect. So we must be careful. If oil starts to go over $100, if for any reason the Naira starts to get too strong, as it were, we may find ourselves having to battle down some degree of inflation from the levels which we are already.
All right. Mr. Adebajo, let's also stick to this conversation around the Naira for crude swap model that Dangote is saying that it should be replicated in other sectors of the economy. According to him, he said, of course, that policy has led to the cut in fuel prices. Do you agree with that? I mean, the fuel prices is still very high, according to some Nigerians.
Well, we would say it's high compared to where we're coming from prior to May 2023, but it's at a level that can actually be explained or perhaps justified based on costs. Has Dangote Refinery been able to drop crude oil prices? Yes, it has, from the level it was prior to when the refinery started operations. And I think that is what Alhaji Dangote is referring to. Because he's having to buy in Naira, and he's looking at some of his costs in Naira, I believe, particularly the distribution element of it, the prices are able to come down. And we see this impact in terms of how inflation itself has moderated over the last 2-3 months. My hope is that we're able to sustain the seeming reduction in energy prices, because for as long as we continue to do that, inflation will obviously continue to moderate. Energy prices are a key element of inflation, just as food prices are. And who knows, if energy prices start to drop, maybe distribution costs for food itself will drop, and we may see something in terms of Naira stability. So that's the take in terms of the crude for Naira.
All right, Dangote is apparently, calling for, is promoting domestic investment, and of course, a lot is needed in that regard. But how about addressing structural challenges that we face, especially local enterprises can't survive without addressing these structural challenges?
So that's the major thing, and that's why I said with the policies, we need to be mindful of how this affects local businesses. I was at a seminar yesterday, and a major element of the discussion coming from the Manufacturers Association of Nigeria was that the cost of borrowing, accessing funds is still significantly high. And in my mind, I just thought to myself that, well, this is deliberate. The central bank has kept the MPR at the level it is right now, mainly to manage inflation, and it has been successful so far. It's still not stable enough to start to drop prices, because inflation hasn't gotten to the level where the monetary policy will prefer to see inflation. I think there are businesses that need to rethink their models, that need to rethink how they will survive in the current situation. It's not all about transferring costs to consumers through prices. It's also about being creative in terms of the business model that is engaged on by these organizations. What exactly can they become lean in terms of? Do you need to run a fleet of cars? If you can talk to a Bolt or an Uber and get into an arrangement with the organization and use those cars on a need basis, you will find that your fleet maintenance costs may drop. This is just an example of a model in some cases. What can be outsourced? We see this happening in so many ways. Some smaller companies who do not have the capacity to take on that kind of ancillary type of services always outsource them. And these things are very, very important. We're not exactly in a thriving economy right now. We're in a survival economy. So we need to have our weights on as businesses, as entrepreneurs, and to see what we can do to succeed. I'm starting to look at the half-year reports of some companies listed on the exchange. I'm looking at what they're doing, and it's getting very interesting. If you want to look at the market for raising funds through commercial papers, you will find that the volume is being raised this year is looking significant. People would always price based on a risk premium, how they see things and how they feel the cost of funds are. So all these need to be considered adequately by any entrepreneur. Like I said, it's not a thriving economy. It's an economy being reformed. And so businesses need to be alert as to how they approach their business.
All right, businesses need to be alert, but there are also concerns that Nigerian economy is heading towards total capitalism. Do you agree to that submission?
Well, no, I wouldn't say so. And I think the tendency to say that is because of how we have seen the refinery take its position in terms of significantly providing energy. And that's fuel. Let me be specific: petrol, aviation fuel to the economy. But there was a gap. And the thing about entrepreneurship is where there is a gap, you can step into control. Now, the size of the refinery itself makes it possible for that demand or that gap to be met. But that's not the only area of the economy. I don't see the stakeholders or the shareholders in the refinery saying they want to set up an airline that's going to cover the whole country. I don't hear them saying they want to set up a shipping fleet. There are still lots and lots of opportunities, but we've always been a capitalist economy. We've never ever practiced socialism in Nigeria. It's always been that the market tends to dictate. And for those of us who tend to think more from the classical economist perspective, we would always say that a free market, a free economy is best. True, it leaves certain people vulnerable, but that is the area in which the government, through its social contracts with people, can then intervene. And that's why we have the Ministry of Humanitarian Affairs to see to those who feel they are so vulnerable and they're feeling the effects of the free market.
Talking about effect of free market, don't we think we should provide, an enabling environment where small businesses can also grow as well? Our own kind of free market economic is the one that emasculates the small businesses while empowering some of the big corporations. Is that a way to run an economy?
It is challenging. So let me speak to a couple of things which I have seen, and I've actually had engagements with the Nigerian Credit Guarantee Company. I've had engagements with the Consumer Credits Company. And there are steps being taken from the government to try to come down. And the targets for these national institutions are actually SMEs. If you then start to say, okay, so when did these companies start? Both of them actually started effective operations this year. Because they're national companies, they're not retail. And therefore, you and I, if we were small business operators, can't walk into those companies and get the benefits. We still need to be able to go through institutions like banks or microfinance institutions. And so it will take some time. But then time is what a lot of vulnerable people do not have. And I share that sentiment. However, we need to allow policies to start to work. Again, I say, Yusuf, it's an economy in reform, and it's not going to be easy at all. The thing we need to ask ourselves is, what direction is the economy pointing to? at the end of the road, is it going to be better? If it's going to be better, how do we make sure that when we get to that stage where the curve turns and starts to go upwards, we are there at that point to ride the upward direction of the curve? And so we need to learn how to manage or have a new perspective to how we see our businesses, how we model our businesses, and how we want to survive in the economy today. It is challenging, no doubt, but and everywhere has its challenges. Every single country, every single economy. You and I must have read a lot that even in the US, a lot of people in the agricultural sector suddenly found themselves without the low cost workers which they already had and which they were using because of government policies on immigration. So we will face shocks over here. If there's one thing, Yusuf, that I think I'd like to point out, when the current governor of the central bank came on, he did say that the central bank was going to be run as a central bank should be run. And a lot of us have applauded to what we've seen. One of the elements he said will make the CBN become central bank is that they will not engage in interventions anymore. There were lots and lots of intervention funds, and the key element was that those intervention funds were misused. Now, when we start to have consumer credit corporations, credit guarantee corporations, and the like, instead of having intervention through the CBN, you have institutions that need to be accountable, manned by responsible persons who would ensure that what they're doing drills down to the economy. So we need further interventions at the small and medium scale level. We need further interventions at the consumer level. The credit thing is good, but it's got to be done well. And they are actually intervening based on global best practices. Like I said, I have engaged with both institutions, and I'm pretty much aware that that's the approach they're taking.
Indeed. Mr. Adebajo, before I let you go, I want to quickly get your take on the GDP rebasing numbers that was released last week, which still put Nigerian economy at number 4 in Africa, behind South Africa, Egypt, Algeria there as well. What is your take on that GDP rebasing, moving us to 372 trillion naira?
Well, it's interesting that about the time the rebasing happened, we also had the shock of the naira being devalued. If you were to look at the GDP based on the previous exchange rate, and that's from an economical perspective is particularly absurd, because you're trying to put or force fit the present into the past, then we won't be at the fourth. But the reality is we are where we are, and we rebased. We've taken on additional productive sectors. We're counting them now. It's pushed us up in terms of value, but our exchange rates has actually dropped us, ultimately, in terms of ranking. However, it's a good thing for the government to look at where it is. Remember, the aim of the government is that we should have a $1 trillion economy. I came across a list of the top 10, or was it top 20 economies by GDP, and the least of them there had 920 something million, give or take, dollars, just below $1 trillion. And I said to myself, we need to ask ourselves, looking through those countries, Turkey, China, Russia, the usual suspects, if I were to name the countries in Europe, in South America, in North America, and Asia in particular. So what is Nigeria not doing that these countries are doing? And that's the first thing we need to ask ourselves. And earlier on, when I spoke about policies and planning, I said we need to be intentional. It doesn't matter if we suddenly get a windfall from oil prices. It shouldn't matter if the Naira becomes stronger, we should be intentional in terms of what direction we're taking the economy. We should be intentional of ensuring that our productive sectors are sustainable, they are funded, the infrastructure required is provided, and the private sector is encouraged to play the role that we need to play. Something occurred to me a couple of days ago. I read a news item that Nigeria donated the cashew nut seedlings to Ethiopia. And I found that strange. Now, because of what I said earlier about what are those countries doing that we aren't doing, if one was in a position to have advised the government, I would have said, get a Nigerian company or two to actually go and set up farms in Ethiopia and have cashew nut farms. So they become Nigerian companies. And when they export from there, the Ethiopian government will, of course, allow them to remit. Simply as simple as the way MTN is a South African company providing telco services here and is remitting its profits home. So that is what we should do. And what will happen there? You'll still have cashew nuts in Ethiopia. You'll have local demand being met. You'll have export capabilities. And a Nigerian company will be reporting earnings. So rather than donate seedlings, this was an opportunity to get a Nigerian agricultural company become
investment banker. Thank you so much for your time there. We appreciate your contributions. With that, the show today will be back again tomorrow. I am Yusuf Akogu.